Ladies and gentlemen, people of the internet, welcome back to yet another episode of Crypto Over Coffee. I hope you're doing well today, and if you're new here, every single Friday I break down the latest news and the hottest topics in the world of technology and cryptocurrency over a cup of delicious coffee. Now in today's episode, we're talking about the big price drops this week. We've got some Bitcoin stuff, some crazy ransomware to talk about, and of course, our usual 404 Logic Not Found segment. But before we get into all that, as usual, we're going to start off with questions from the community from YouTube and Twitter. So I'm going to pull those up right now. But if you want one of your questions answered, make sure you leave them in the comments down below or tweet me at Hashoshi4. And if you would be so inclined, please do subscribe to the channel. You can click the little subscribe button down below along with the bell notification button to get a heads up whenever I post new content here on the channel. So let's go ahead and dive into these questions. Now, the first question is from Vandy89. Do users need to transfer from the Byron wallet to a Shelly wallet? So this is in reference to moving from the old Byron era of Cardano over to the new Shelly era and being able to use that wallet for staking. The answer is yes, but there is a process in place to make that super easy. So if you're using the standard IOHK Cardano dataless wallet, which is the desktop wallet, it's really easy. Make sure you have your seed phrase backed up for your Byron wallet, your Byron era wallet. And then you can use that seed phrase to recover to the new Shelly version of dataless. And it's pretty much a done deal after that. You just recover your seed phrase. So of course, seed phrase storage is critical. Now the same thing goes now for Yoroi, which is the mobile wallet version, which is what I use. I actually just did this fairly recently, where you can move your Byron era wallet over to Shelly from Yoroi as well. Same deal with the recovery phrase, or if you want to create a brand new wallet and do it that way, totally up to you. But if you have any Cardano ADA on exchanges, make sure you move it over to a wallet that is self-custody. Take control of your ADA. Great move. I moved mine to Yoroi recently, some that I had still on exchange. Great move. So thank you very much for your question. Now, the next question is from Ramon Soto. Where can US buy DOT and what wallet is needed? This is a good question as well. Everyone's looking to buy Polkadot these days. And the place that I prefer to buy Polkadot is Kraken. I know a lot of people have mixed feelings about Kraken, but I think they have a great user experience. Their security posture is fantastic. You can use YubiKeys, which you know I love. So you can use YubiKeys on the platform to secure your crypto. And DOT is available on that exchange. So I got mine on Kraken. And then for wallet, there's a wallet called Stash Wallet where you can stash and stake your Polkadot. And that is also a fantastic wallet. I'll leave a link to that article below, which is one that goes through all the steps to set up your Stash Wallet. Awesome. So thank you for your question. Now we have Aditya Nayar. Nice explanation. Waiting for your review on farming like Yearn Finance, Curve DAO, etc. Here's my review of a lot of these different projects. Super high risk, potentially super high rewards. Now, Yearn Finance is very interesting because it's basically mastered the concept of scarcity, where it said, we're going to be even more scarce than Bitcoin, and the price shot up to insane levels. Now, Curve DAO is also an interesting case because the actual implementation of Curve DAO that really made it out into the public world was actually not implemented by the team who built it in the first place. It was someone else. And they said, well, it's all open source. It's the same code, so we're just going to run with it. So that's a pretty funny story. But I think the main theme here is that with all of these farming coins and especially the emoji coins and all the food coins, super dangerous stuff. You can make profits, no doubt, but just be mindful that if you are the last person holding the bag, you're going to get yourself into trouble. So just keep yourself extended in a way that you're comfortable with. You know, things like that hot dog coin that went basically fully to zero from its ridiculous high prices in a matter of minutes. That can happen to anyone. So just bear that in mind. I think a lot of this crypto crash that we're experiencing right now is partially because of the, disjointed reality of farming in some of these coins. So just my opinion, not saying that they're evil or bad, just keep your wits about you. Brian Codington, love the videos. Wondering what you personally use to track developer activity on different blockchains. How would you compare activity on Polkadot versus Ethereum? Great question. So for me, when I'm trying to evaluate a cryptocurrency or a blockchain's code base, granted, time is the number one element of that. The more time you have to devote to digging into the project, both on its actual code bases on its GitHub, but also on the tooling that is associated with it out there and its sample applications that use it, that helps you get an idea of how the project is doing. Now, a lot of people will go and they'll look at commits, right? They'll say, my project or my favorite project has, 1,000 commits in the month of August. Commits don't mean anything, right? Like I can go and make 100 commits right now to a GitHub repository, change a few lines, add a few comments, and really accomplish nothing, right? You want to look at code coverage. Are they writing tests? Are they passing tests? Do they have metrics about the code they're writing? Then if you have programming skills and you know the language they're writing in, can you go into that code and actually look at what's being written and see, does this make sense? The problem is these code bases are huge, and so you're not realistically going to go audit all that code by yourself. So ultimately, you have to sort of balance that and strike a balance and say, let me look at the code habits. Are the commits well populated with code? Are they going and they building towards features that are on their roadmap? How transparent is what they're building in the documentation, right? How can you keep track of what they're building? So when I'm looking at Polkadot versus Ethereum, it's also a little challenging because you're comparing two projects that are very different in architecture and very different in purpose. And so I look at Polkadot's, open source repositories. They're also kind of spread out. So is Ethereum 2.0's. But I think that the number one thing to look at is those core repositories for the actual blockchain code, the consensus code, etc., and trying to see how many commits are going in that are of quality, how many active developers do they have test coverage, do they have code coverage, do they have tooling, are they linking to tooling, is it well documented? Those are some of the things you can do in a relatively short period of time, but going beyond that and actually looking at the code, it could take you weeks or months to do that. So hopefully that gives you a little bit of insight, at least into how I go about things, but really it's not an exact science is the best thing that I can say. But thank you so much for your question, Brian. Roman Soltis, thank you. Love the show. Really appreciate that. Thank you very much, Roman. Can you explain why SMS 2FA is not good and which 2FA would you consider strong? SMS 2FA is not good because it is really, really easy to SIM swap someone, where you can, as a hacker, take control of someone else's cell phone, receive those text messages to use to get into different accounts. The average person doesn't really have solid passwords, and so if you have a weak password plus SMS 2FA, or even just SMS 2FA, you can bypass even a strong password because a lot of companies say if you have the 2FA code, you're good to go, right? So that's very dangerous, and you can lose control of all of your accounts so fast. It's crazy. And so SMS 2FA is so unsafe, such a poor decision for companies to use it. So hopefully people stop using it. 2FA that I consider strong, Google Authenticator definitely is adequate. It's a little bit more annoying because you obviously have to migrate to a new phone manually later. If you do get a new phone, that is what it is. But the best possible security in my mind is to use YubiKey and YubiKey Authenticator, which is a hardware key you plug into your phone to then unlock your codes. All the stuff stays sort of cold in cold storage, right? And it's just so much better. And that's what I use personally. But there are a lot of ways you can go about it. Just don't use SMS 2FA. And he's also asking, hardware wallets store private keys, not coins, but if I lose the device, I can restore using passphrase. Does this mean the key is derived from that passphrase? Is it stored somewhere and validated on the blockchain? So another great question. Yes, you can restore using that passphrase, and yes, your keys are really represented by a root seed key, which is what that seed phrase or passphrase represents. Behind the words, there are actually sort of alphanumeric characters behind that compose your seed key. And that's why it's so sensitive. The reason why they put words and mapped this standard, like BIP39 or BIP44 standard for these seed phrases to human readable words, is because obviously they're human readable. It's easier for you to write that down and keep track of it rather than writing out a bunch of numbers or a bunch of letters and numbers, right? So it's easier to track. Now, that being said, they're not stored somewhere and validated by a blockchain. It's actually a cryptographic scheme wherein if your address is mapped to a certain balance of tokens or coins, and you were to create a signature from a private key that pertains to that address, then the blockchain knows you are the owner of those coins. So hopefully that makes sense. It's not as simple as saying, okay, well, they have a seed phrase, you punch in your seed phrase and it maps to something on the chain. It's a little more complicated than that. My answer is highly simplified. Bear that in mind, but I think it gives you at least the right idea of how the mechanism works. So thank you so much for your question. And then finally, our final question for the day, Crypto Maximalist. Hey, Hashoshi, thanks for all the great content. Thank you. Wondering if you could talk a little bit about stablecoins. Which ones do you like? I'm asking because with the inevitable inflation of the US dollar, wouldn't this affect the value of a USD-backed stablecoin? So yeah, two questions in here. One is, what stablecoins do I use? Tether, TrueUSD, USDC, DAI, and Paxos. Those are the ones that I use the most. I'd say most people use those the most. Tether has its issues, so I've strayed away from it a little bit more lately. I use DAI a lot and USDC a lot. TrueUSD is probably the most liquid of all of those. But in terms of inflation, yes, if you're if you're pegged to the US dollar, it moves with the US dollar relative to other assets. And so, yes, it's affected by that. All stablecoins work the same way. Euro, Great British Pound, etc. They're all going to work that way. And that's the point of a stablecoin. But it does give you access to liquidity on exchange if you want to make a trade, move to a stablecoin, and then quickly get back into crypto again. Pretty much indispensable. So, yeah, there's that. Stablecoins, touchy subject for some people. And hopefully we find more ways to achieve crypto-to-crypto trades better, like Uniswap is doing. So thank you so much for your questions, guys. Hopefully all of those answers were helpful. Let's dive into the news for the day. Now, to kick things off today, let's just get right into the price action that we've seen this week, which has been not so great to say the least. On Monday, everyone was riding high on waves of amazing price action and DeFi emoji coin gains, but then later in the week on Thursday, with some notable rug pulls and a rebounding US dollar, crypto at large took a pretty massive hit. Now, in most cases, cryptocurrencies were down 10 to 20%, even closer to 30% by Friday or today where I'm recording this video, but some were even far worse than that, like the handful of DeFi food coins that went to zero in a matter of minutes. Now, if there's one thing to blame for this market-wide slump, I would say it probably is the variety of garbage coins that have accrued crazy quarter or $500 million or insane capital inflows and then subsequently went to zero, leaving people holding the empty bag. Now, this type of event can trigger significant movement in such a small space like crypto is, and not only that, but there seems to have been a fair amount of Bitcoin sell-off by miners, which were inevitably them trying to take advantage of a Bitcoin price that had just overtaken 12K. As overextended investors get shaken out of speculative, unaudited DeFi projects that might also sell out whatever they have to make up the losses in other crypto. And after a mostly green period where we saw many coins go up by several 100% even, profit taking was kind of expected in my mind. And as usual, the advice remains the same. Don't overdo it, risk only what you can afford to lose, and please don't go all in on unaudited experiment coins like these DeFi craze coins that we're seeing these days. Now, specifically for Bitcoin though, which ended up deep into the 10Ks, like teetering on the edge of 9K, I think we even broke that briefly. A lot of the price action in the negative direction likely comes from two major elements. The first is what we already mentioned, miners selling off Bitcoin in a reasonable quantity to take advantage of the higher price. And then two, the relative strength, God knows how, besides the euro taking a shot this past week, of the US dollar, which seems to be relatively indicative of the Bitcoin price trend depending on which way the dollar is going. Now, it seems that investors are looking at fiat currency's weaknesses in order to price Bitcoin in a lot of ways, and that to me is pretty interesting. Beyond that, I do think that the crypto markets across the boards hitting a resistance because of all the growth we've seen to date probably hurt Bitcoin as well. And that being said, I don't think this is a huge cause for panic. I think this was to be expected. The best thing you can do is to make sure your Bitcoin is in cold storage, that it's safe and sound, and that you're not trying to time the market, because you're never going to be able to time the market in terms of buys or sells. Now, speaking of keeping your Bitcoin securely stored, I am a big fan of the folks over at Cloaks who make really, really cool 3D printed products for Bitcoiners and crypto fans alike. And one of the coolest products that they make is a 3D printed honey badger in a variety of sizes that's actually a hidden storage compartment for your hardware wallet. Not only is the honey badger an iconic reference to the meme that is oft used in relation to Bitcoin, it is a functional piece of art in and of itself. So it's super, super dope, and I'm going to get myself 2 of these honey badgers actually to store and show around my office. You might find one on the desk soon. And if you haven't already, I highly encourage you to check out Cloaks' online store for things like coasters, badgers, wallet mounts, and more. Now, I'll leave that link down below in the description if you're interested. And I'm very stoked to report that Cloaks has offered up a prize pack for me to give away to one lucky person who comments on this video below. Again, all you have to do is comment on this video and you'll be entered into the random draw to win a pair of coasters, a small honey badger, and some stickers from the nice folks over at Cloaks. Just for transparency, this is not a sponsorship. I'm not getting paid. I get nothing in return. This is just really cool stuff I wanted to share with you. They were nice enough to offer up a prize pack for me to give away. Moving on, though, in what is a significant ruling in regards to privacy in the United States and abroad, a circuit court in the US found the NSA's phone surveillance program that started after 9/11 interestingly not necessarily legal. And I can give you a quote in regards to this case. We conclude that the government may have violated the Fourth Amendment and did violate the Foreign Intelligence Surveillance Act, FISA, when it collected the telephony metadata of millions of Americans. Now, that is a quote, by the way. And the primary takeaway here is that while the actual ruling focused on violations of FISA, the fact that the Fourth Amendment was brought up in this context as a potential violation is the most notable outcome. The Fourth Amendment, for those unfamiliar, is one that protects Americans against unreasonable search and seizure, and this includes the execution of warrants in order to search a person's houses, papers, and effects, based on probable cause, of course. Now, this amendment, of course, was never written with any concept of technologies like we have today, which has led to much controversy over its applicability to things like data in a digital format. Now, this ruling gives credence to the fact that telephony data belonging to a person is in fact likely protected under the Fourth Amendment and cannot be accessed without a warrant. I would love to see further rulings made on this subject to codify that fact, inclusive of other wholly owned data. So this is very interesting, and I will be following this story pretty closely as this goes on. Now, this next story originally broke a couple weeks ago, but I wanted to dig into it a bit more before I reported on it, so here it is today. Cosmos, the interoperability project that's taking the spotlight next to Polkadot, almost died completely in early 2020 during a feud between its founder and major early contributors to the project. Yes, you heard that right. Several years of development almost went up in flames due to a human brawl. From what I've been able to gather, the disagreement was between Jae Kwon, the founder of Cosmos, and a core contributor on the Tendermint side, or at least involved in the core project, by the name of Zaki Manian. I really can't find much on the context of what the fight was about, but I can tell you that from what I've read, it seemed like a stupid feud over semantics, like the ethos and pathos of the code and the project that Zaki Manian and co. were writing. Now, to me, after a $17 million ICO and then a huge growth period where they have hundreds of millions of dollars in growth, where thousands and thousands of people are holding your token, to allow such a pedantic argument to threaten the future of the project is a bit ridiculous and kind of crazy in my mind. Now, maybe there was more to it than what I could find online, and there was a real reason for the fight, but to me, it seems like there wasn't anything materially done to cause this rift. It seems like a personality issue. Now, as it stands now, the core team that supports Cosmos is broken up into 3 distinct entities that abide by a structured governance structure. Now, this is to keep the teams separate, but still work towards a common goal of building out the Tendermint and Cosmos ecosystem. The good news here is that the project did not dissolve after this mess, and work continues on the Tendermint core side as well as the Cosmos network architecture and tooling side. In reality, it's really more like 5 or 6 organizations or teams or companies working together to build this ecosystem out. But the point I want to drive home by mentioning this story today is that despite how solid a project is from a tech perspective and from a fundamentals perspective, you can never really know what's going on behind the scenes. And as a result, I urge you to use your best judgment and never ever FOMO into a project with more money than you can stand to lose. Not every project, no matter how good it is, will survive all of this craziness that we're in today. And we are lucky that Cosmos did survive. I'm, for one, really glad about that. But the song remains the same. Make sure that you realize everything can go to zero. Which brings me to today's 404 logic not found in the same vein of Cosmos. And for those who are as of yet uninitiated in this little firecracker of a segment, I highlight notable tech-related fails or otherwise stupid moves in the world that need to get some attention. And speaking of attention, if you want to help this video get some attention from the YouTube algorithm gods, please do hit that like button and get subscribed because it tells the YouTube robots that you're enjoying the content and you want more of it. So thank you very much for that in advance. Now let me preface this by saying that I have no ill will towards the project in question in regards to their actual project or solution. Actually, the people involved I actually quite like. But I think the marketing play that was made recently was unwise and counterproductive. And that project is Band, the Cosmos-based Oracle network solution in staunch competition with Chainlink. I will also note that before I start getting accusations about being partial towards Chainlink because I make a lot of content about the project and I love the project, this has nothing to do with my holdings. I actually hold both of these projects. I like both projects, but this still stands as a criticism. Recently, the CEO of the Band protocol took a pot shot at Chainlink, implying that one Oracle request could cost hundreds of dollars, and as a result, it's not really cost effective. In this, he referenced a couple of transactions on the network that were in the $400 to $500 range per transaction. This was supposed to support the fact that the Band protocol is a cheaper, better alternative to Chainlink, and the major benefit it brings is cost savings, lower fees, and just better data transaction experiences. Now, the problem I have with this is twofold. One, it kind of pisses me off when projects attack each other when neither project is really done building their vision and they don't really even have everything out there yet. It makes zero sense and it does no good. And then two, the point that was made in regards to the costly Chainlink transactions was a little bit misleading. Let me make this clear. I think Band protocol has a lot to offer. It's arguably the most promising Oracle solution out there next to Teller and Chainlink. But this directed attack towards a competitor is ill-advised and counterproductive. All it really does is exude some level of insecurity in my mind. I would say you let the product do the talking, right? And then users will come. Not to mention the fact that in an ideal world, Chainlink and Band, along with other oracles, will have to work together interoperably. There's almost no choice. There won't just be one Oracle network to rule them all. So why not build that bridge to grow the space and technology together and to pool your resources instead of trying to take solo wins now? So secondly, the transactions that were made that costed $400 to $500 were not actually solo user transactions on Chainlink at all. They were transactions that were shared amongst many participants in the network during an Oracle feed update, at least according to the Chainlink folks. Now, I will say the criticism about multiple transactions being required for certain operations on Chainlink is indeed valid, but mostly because of Ethereum's fees, it gets a little bit difficult to use because Ethereum is just so costly. I would also say that there's a systemic problem with Ethereum that affects all projects that use it right now for anything, though Chainlink chose to operate on Ethereum, so that's not something they can be fully absolved of. My main point here is that it's weak sauce attacking a competitor in a space where we should be working together, where there is literally nothing gained from doing this type of thing. And to try to do so and to try and denigrate a competitor with something that's kind of misleading or a misleading data point just doesn't make sense either. So 404, logic not found. Now, this next story actually almost made 404 logic not found, to be honest, but I think it eked by and didn't get that title today. But this week, Vitalik Buterin, one of the core founders of Ethereum, took to Twitter to state that a 51% attack on Ethereum 2.0, the proof of stake next generation of the protocol, would in fact not be fatal or the end of the world. I was also shaking my head and trying to figure this out. This was a head scratcher. But his supporting argument was predicated on the fact that at face value, if a single party or a cartel were able to collect enough stake to control the network for an attack, it would only last one cycle because the attackers would be slashed for malicious behavior and lose their stake, making the attack unreplicable from there. The other concept he used to defend the protocol was the use of a soft fork to essentially or effectively push the attacker out during a censorship attack. Now, while this fundamentally is correct and proof of stake is actually less severely hamstrung in the event of a 51% attack, I think to minimize the damage it could cause or that it would cause is a pretty questionable move. In saying this, I feel like Vitalik is ignoring a few critical elements of a successful 51% attack regardless of network consensus, which is, first and foremost, the fact that even if a soft fork were to occur to fix the problem, those operating on the network would have to rather quickly select the correct fork to continue forward with the rest of the network. Now, this isn't as simple in practice as it is in theory. The second thing is also that confidence and participation are a big part of a blockchain network, especially within proof of stake. And if a 51% attack were to happen, I would bet that many would immediately jump ship and many would lose faith in ETH 2.0. Now, this could make future attacks easier, and it's also across the board just bad for the network. So, yeah, a 51% attack might not be fatal per se, but it would be a real big freaking problem, in my humble opinion. I often take this channel to talk about malware and other sneaky, scammy things on the internet that you have to watch out for. Well, because I love to study this type of stuff, and today is no different. There's a somewhat new ransomware floating around that's particularly sinister, and the nomenclature behind it is actually pretty nostalgic for me, so I figured I'm putting it in the video. The ransomware is called Ryuk, which is inspired by the King of Death of the same name from the popular anime Death Note. Fantastic show, by the way. Highly recommended if you haven't watched it and you like cartoons. I do. Now, if you're familiar with ransomware, it's essentially a family of malware that propagates itself and then encrypts file systems and computers so that the owner cannot access anything until they pay a ransom to decrypt all their stuff. Hence the name ransomware. Now, this particular Ryuk variety is one that is pretty much tailor-made for larger corporate networks, government networks, other big organizational networks, and it usually grabs hold first by an employee or a member of the network unwittingly downloading a file infected with the Emotet Trojan, which is then used to open the gates for other malware that quickly spreads across the infected network to take hold of everything in its path and encrypt everything along the way. Now, what is particularly sinister about Ryuk, though, is that it can even be used to take over sleeping machines because it can wake these machines up and then infect them as well. So this is a particularly nasty one. And while most ransomware is particularly nasty, this one has made the list of top priorities for a lot of security researchers and cybersecurity people out there because of its rapid growth since 2018. Now, to protect yourself and more importantly your organization from this, it's critical to put into place clear guidelines for attachments and emails that are suspicious. Because this often propagates from files and other sketchy emails, ensure that you and those around you are not opening up files that you're unsure of in origin or that just don't look quite right. Enterprise filters for emails to get rid of some of those high-risk ones up front before they even get to inboxes is also recommended. But as a rule of thumb, before you open something, check the address, make sure it's someone that you know and you know where it's coming from. Don't open attachments that you don't know are safe. And just in general, use your best judgment and be safe out there, folks. Now, in other news, Binance, who are clearly feeling the effects of decentralized exchange services like Uniswap, just created their very own liquidity platform for token swaps. This comes after Uniswap recorded record high transaction volumes that surpassed massive players like Coinbase. Binance, who are of course among the leaders in the centralized exchange space, are likely looking to recapture some of the market share lost to Uniswap for those interested in ERC20 tokens. Now, right up front, my initial thought here is that unless the Binance platform offers access to more tokens than Uniswap does, why would anyone switch over to use it? But in reality, more competition often drives products in this space, and I'm all for that. However, after the CoinMarketCap fiasco, I have some trust issues with Binance, to be honest. And if you're not sure what I'm talking about, basically this is where Binance acquired the platform, CoinMarketCap, and started making sweeping changes, which drove 3 of the main and original CoinMarketCap executives to just jump ship. Clearly, they didn't agree with what was being done. All in all, not a great situation. Now, I don't want exchanges controlling coin rankings and data as well as the ability to trade, because that just doesn't seem right to me. Anyways, my original point is that I will be trying out the new platform that Binance is building and is releasing just to see what it's all about, and hopefully it's a good competitor for Uniswap and it pushes the rest of the space forward. But folks, if you have some time to stick around, please do check out my recent video about my top 3 favorite VPN services. It's critical right now more than ever when everyone is home to use good cybersecurity practices and put that layer of encryption over your traffic. So I'll leave that link for the video right here on the screen. But as always, folks, thank you so much for watching this video, for spending time with me on your special Friday or your weekend. And it's much appreciated. And until next time, cheers.